Have you ever watched the economy and the politicians saying the stock market is an all-time high, everything is booming while you feel poor? You are not alone. It's all related to several factors which we'll break down in this video. For example, the reserve currency status of the United States, money printing or QE, which you might have heard of. It's also related to inflation, which is a hidden tax on the economy, and it all basically goes back to central banking and especially to the great financial crisis of 2008. So it all starts in 2008. 2008, the GFC, Great Financial Crisis, the economy basically went into a halt. Everything stopped. The reason, if you've seen the movie The Big Short, is related to derivatives on housing. Of course, some people made money, such as Michael Burry, and there are other several factors. Basically, 2008 forced the government to bail out companies. In order to bail out these companies, the government had to do two things. One, they had to get the money from somewhere, right? Two, they had to buy them, nationalize them. The money was created out of thin air, as they say. But unlike previous times when governments created money, this one had to be backed by something. So it was backed by debt. Basically, the government created debt and the Federal Reserve bought it. Then the government had the money to do all the manipulations that they needed on the economy. Now, I will not get more technical than this. This process of the Federal Reserve basically buying assets is called QE, quantitative easing. This is the part of the financial plumbing. Since this video is not meant to be too sophisticated and too boring in this aspect, we will not get into this. So after the printing the money, there was the reverse effect of the financial crisis. Since we pumped a lot of money to the economy, and since institutions that were basically insolvent got bailed out, and people didn't lose their job, though some of them got closed, such as Lehman Brothers. So we all know the scene in The Big Short where we see people like getting in masses out of the office since the bank was closed. But basically the government bailed out the other companies, such as AIG for example. What has happened after the financial crisis is the following. Let's break it down like one by one. So we had the bankruptcies that I was talking about, we had the issues with the companies that were bailed out. Great. The money was printed, great. The debt was produced by the government, okay, good. Now, it's not good, but this is the situation. So what has happened after that, second thing, is some companies didn't go bankrupt, right? So people from these companies had their job back. Some of them were cut, but others stayed, and the companies eventually got out of the crisis and the economy started working again. So think about the economy was growing, everything was fast, everything was great, and then it went to a halt. Financial crisis, government, Fed, everyone bails out, and we start growing again. Okay, good. Now, once we start growing again, we have several effects that were caused by this. So this is number 3. The effects, first of all, rising again high housing prices. Second, rising stock prices. Third, gold prices eventually also rose. So if we look at everything, what connects all the things that their price rose was assets. Any asset, almost any asset, was appreciated, while money was depreciated. So money is a thing we exchange for these assets. So if we need more money, it means the money is basically losing its value. Now, salaries of people got down, right? At the same time, housing, again, stocks and everything got up. All of these effects together are basically crushing the middle class and the lower class, and even some high middle, let's say. The difference between someone who is surviving and thriving in this situation is not the job that he has. So some people have a very well-paid job, okay. But most people, the difference for them is whether they hold assets or not their job, not their salary. You need to hold assets, basically. The effect of this financial crisis and this money printing was inflation, but the inflation was mostly in assets. Yeah, food prices rose since then, yes, everything rose, but the salary basically kept up with most things, except for assets, right? The price of eggs and the price of gasoline from 2008 was changed, but less than your salary rose. Even the price of TVs and phones and everything, it stayed pretty much the same. You can even say that it was reduced because the amount of phone that you get and the amount of TV that you get, so basically the technological breakthroughs and the differences are enormous, while the price is pretty much the same. So this is what is holding you back. The fact that you don't own assets and the fact that they are unreachable for many people, especially younger like Gen Z and some millennials, this is what makes you feel poor in this aspect. Let's talk about the second thing that makes you feel poor, the reserve status of the US dollar. This thing applies, of course, to people in the US, but people in other countries are also affected because the economy is global. We have one economy, and actually the name of the dollars, the professional name of dollars outside the US economy is called the euro dollar market. Now, it doesn't in any way relate to the euro currency. It was called like this historically because it started in Europe. So all the money, the dollars that are not in control by the Federal Reserve outside of the United States is the euro dollar. And this market is around 70-80 trillion dollars. That's a lot. That's more than the US debt. So the dollar is global and it affects everything. Now, the United States decided that it's cheaper to do many manufacturing jobs outside the US. For example, you can pay the Chinese, especially when they started with their revolution, their industrial revolution. The labor was enormously cheaper than the United States. Same for other countries still in Asia. So the United States decided, why do we need to produce in the US if we can produce in other places? So we will export our labor to other countries. They will produce for us. Then we will buy from them in dollars. And these dollars will come back to the US economy. Why will they come back? Because we're talking about huge amounts. And even if they try to exchange them for their own currency, eventually there is nothing to buy with that. So what do you buy? You buy the safest asset in the world. The asset that is, let's say, considered the most safest in the world is US debt. Basically, the US is exporting labor, exporting production, and importing debt, right? It's like they importing dollars, which buy their debt, but it's not only buying their debt, it's also buying their assets. Going back to section 1, another thing that contributed to the asset appreciation is the fact that you exported your manufacturing. Because if everyone needs US assets, which is debt and stocks and houses, it affects the whole market, right? Doesn't matter where the people came from. It doesn't matter if they're from India or from the US. They will buy this home, it will appreciate in price if they pay more. There is a saying that price is set on the margin. So if you have a buyer that's willing to pay more, it will go up more. This effect was especially critical in all the so-called Rust Belt states. Detroit is a city, for example, that's really famous for the degradation that happened there, because initially a lot of US cars were produced there. And then they moved somewhere else and less US cars were produced. And then they imported more Japanese cars, German cars and others. And eventually what happened? The US lost some of its production and people got fired. For other people who are creating services such as programming, advertisements, such as anything that is knowledge work, they got a benefit from it. This is why you see the hubs such as Silicon Valley and New York and now Texas benefiting, while the central parts of the US are getting crushed by this change. This is what made Trump so popular in the previous elections, because he promised to revive Main Street, the regular folks, the people who are not doing only the services jobs, but the people who are doing the manufacturing and the job related to agriculture and all this physical labor, right? And by the way, the reason that Trump is doing his tariffs on the world is exactly related to this, because if you want to revive manufacturing inside your country, I'm talking about the US, not every country can do it, you can put tariffs on other countries and force them, as Trump is trying to do, to create the manufacturing inside the US, since it's too expensive, it became too expensive to import. So if it's expensive to import, the companies have an incentive to move the factories into the United States. You can say, okay, they are Toyota, why would they want to import their factory, like move their factories to the United States? They are a proud Japanese company. It's all nice, but they have a company and they have the stock and they have shareholders, and eventually they need profit. So if the biggest market in the world, which is the United States, told them, listen, we're putting tariffs on your products, they will move their factories to the United States since they must sell to the US market. Everyone needs the US market, including China, especially China. Reason 3 why you feel poor is the so-called petrodollar. Now, it goes back to what I've said about the euro-dollar market and the dollar recycling. The biggest commodity market in the world is oil. 100 million barrels of oil are traded all around the world every day. 100 million barrels. These barrels, I'm not talking when the Hormuz Strait is closed, of course, going back to my previous videos that you can see below. These barrels are traded mostly, like 90% of them, in dollars. These dollars, again, are shipped overseas. And again, it creates the same loop that we talked about. It goes to the euro-dollar market, which is the dollars outside of the US, if you remember. And then it comes back to the US as asset appreciation and dollar debt and all these things, which again create more debt, which creates more asset inflation, which removes the need for the labor in the US because it's cheaper overseas, and then this whole loop is connected eventually. So the crazy thing about it is that countries that trade between themselves, for example, China buys in dollars oil from Saudi Arabia. So we talked about manufacturing, and now we're talking about oil and other commodities. Everything is in dollars, and everything eventually gets invested in the US. And it all creates a loop where assets are appreciating. This is why you can't buy a home. This is why the stocks are expensive, the stock market is expensive. This is why the US has so much debt, because it needs, in some way, the main export that the United States creates is debt. Nothing is exported more from the United States than debt. Trillions of dollars are exported by the United States as debt. Assets are your protection right now. And unless this system will reverse, assets are your protection. You have to use assets to buy assets if you can. Gold, silver, Bitcoin, whatever. They are your protection from the appreciation, from basically the dollar inflation. Since this economy is not optimized for Main Street, it's optimized for Wall Street.